Well, let's check in on shares of Union Pacific. They are pushing lower, down more than 4% after the railroad operator reported third quarter profit and revenue that topped estimates, but it cut its outlook for carload growth and stock repurchases. Joining us now to discuss the results, Union Pacific CEO Lance Fritz. Lance, it's always good to have you on. Taking a look at the quarter here, it certainly looked like increased pricing as well as fuel surcharges certainly helped drive revenue higher, but looking at the stock reaction today, investors concerned about those operational efficiencies that you sort of flagged along with the inflationary pressures. How much of that have you seen accelerate in this quarter?
Yeah, Akiko, thank you for hosting me this morning. The quarter was a bit noisy. The fundamental story is we made sequential improvement from second quarter to third quarter in terms of fluidity of the network and operation inefficiencies. And as we exit and head into the fourth quarter, that continues. And so we're continuing to recover the network from where we were in the middle of the second quarter. And I anticipate back to normal in the fourth quarter. That's been our story all along. We showed that progress, perhaps not as much progress as we had anticipated, but real progress nevertheless. Inside of that, to your point, we had solid pricing gains, good fuel surcharge recovery, and overall the financials were strong, right? Record EPS, net income, operating income, freight revenue. But at the same time, we did say that the heat's coming out of the marketplace, that guidance that we gave at the beginning of the third quarter about what we thought volume would look like in the back half, we had to trim down because volume's cooling off a bit across a number of our markets. And so that was a lot of the conversation this morning.
Yeah, talk to me a bit more about that, where you're seeing the pullback in volume and where are the biggest headwinds for you right now?
Yeah, it's mostly related to the consumer. So consumer-oriented shipments on our railroad, that tends to be domestic intermodal, parcel, a few things driven by the consumer. Those are looking like they're cooling off. The consumer has already been shifting from goods back to services, not all the way back. You recall there was a real fundamental shift towards goods during the pandemic. So it hasn't gone all the way back, but at the same time, it does appear that they're buying less. And you can see that in international intermodal boxes hitting the West Coast ports. And you can also see it in demand for truck and demand for domestic intermodal on our railroad. There are some markets, though, where we're seeing strong demand, and it's not going away. Things like coal, some of the bulk commodities, grain, rock, and then a handful of our industrial segments as well. But the total picture says we're going to grow year over year in the fourth quarter. It's just not going to be as much as we thought it would.
Lance, last time we spoke, we were talking about the labor agreements ongoing, and I saw the number here in your quarter, $114 million charge related to labor agreements. How comfortable are you with where things stand right now on that front?
Yeah, I'm less comfortable than I was before the BNWE, our maintenance of way employees, failed ratification, but I'm not concerned. We've got 6 unions having ratified. We've got 5 in the ratification vote, and we've got more work to do now with the BMWED. I think that vote failed to ratify for a very specific reason. The PEB, in addition to proposing wage levels, which are very attractive to our employees, they also said for about 40% of that craft that does maintenance of way, we needed to adjust the travel that we would pay them to go from home to their away from home work location, and the per diem we'd pay while they were working away from home. That negotiation happened on property, and it just closed up on UP about a couple of weeks ago. And that was at the very tail end of the ratification vote for that contract. So I think those were connected. We're back out now working with the BMW to try to figure out a temporary agreement that can be, or a tentative agreement that can be taken back out for ratification. I anticipate we're going to be able to do that. We've got status quo in place there. Other than that, we need to get through the ratification on these other 5 unions and get this baby closed out by the end of the year. And I think that's still the probable outcome.
So end of the year is still the timeline that you're looking at, despite some of the snags that you've hit?
Yeah, I am. I guess the maintenance away employees could drag over into next year. I don't anticipate that. I think there's a path forward for us to get another tentative agreement, get it back out for vote.
Lance, it's always great to have you on the show. Union Pacific CEO Lance Fritz, appreciate your time today.